This is Cece. Welcome to the Orbit. It is Friday, June 14th. We have stocks down a little bit today, pulling back from this rally we've seen since we've gotten this good inflation data and then the FOMC meeting. You can see the past week, where we were hovering around that 53.50 level for 3 days, essentially. Make that gap higher on that CPI data the other morning, hold it through the FOMC meeting, good PPI data this morning. The inflation picture is looking good. Yields are retreating. We'll visit TLT in a little bit. TLT is up, looks strong. Going into the end of the day and the end of the week, we have established sort of a new range over the last 2 days. It's basically between 5450 and 5400, and we are down near the bottom of that range right now. For the rest of the day, SPX options are pricing about a 0.3% expected move. That is about 17 IV. Perhaps it will test this 5400 level, or perhaps we've already made the intraday low and we will rally back towards the middle of this range or the high end of this range. But so far today, not looking like many fireworks. So that means on an iron condor basis, we can look at it here, and expiring today, we've got about 54.30 on the short call, 5400 on the short put. You see how tight that is. It's about 15 points in either direction. So if you were taking that a bit wider, getting 395 short put, 54.35 short call. And that puts you at about risking 380 to make 120. You could perhaps leg into something like this. We are down, so perhaps maybe you start with the credit put spread if we make a run towards 5400, see if we hold and bounce at 5400, and then perhaps get a little bit more premium on a rally from there. As far as the other things going in the market, let's just go in. Let's look at TLT, and then I want to visit IWM. So TLT once again strong today, and you can see this past week very strong, and this is of course goes higher as treasury yields go lower. That 1 month chart, you can see the move we've made, and then let's go to this 3 month chart. So we are, this is TLT getting back to a level it hasn't seen in a couple of months, and that is some of the strength behind stocks, obviously. And see where we are on that 1 year chart. We are back to the sort of middle of that range since we've seen TLT decline most of the year. It's been making some, this low right here, we got down to the low 80s. We are back up into the mid 90s. We've seen this as high as about 100 on the year. So keep an eye on TLT. Getting back to 100 is very bullish for stocks. One interesting thing to point out, something I've been watching, is IWM, which is one of the most rate sensitive of the major indices. This is, of course, small caps. This has actually not been a good week for IWM, which is a bit counterintuitive. I'm not quite sure what's going on here. Maybe some sort of rotation, as we've seen Apple and some of those stocks really make some strong moves higher. Perhaps it's mega cap selling small cap to buy mega cap. But the point is that this is having a bad week when yields are going its way. And you would normally see this as a chance to buy IWM when yields are going this way. And it hasn't happened. Now, there has been some upside call buying in IWM, but it's out towards the end of the year, some very big prints. Obviously that does not affect IWM in the short term, but it's something to be aware of that, some people, some institutional traders are positioning for an IWM rally for the rest of the year. So let's just go in there and look at some of these call spreads out a little bit, not short term, obviously. Let's go out and look at, let's go out to the end of August and just kind of see where we're creating break evens. So this call spread expiring in August, in late August, buying the 198 call, selling the 210 call. And that takes you back up to this range that we've been in very recently, like even just going back a couple of weeks. And it creates a break even at 202.91, which, really we have just seen in the last couple of days. So this is the kind of positioning, especially in low vol environments, where you're seeing something, and this could apply for some individual stocks that you have your eye on or anything like that. You can go out a little bit and look at these kinds of call spreads, pair the break even to recent movement. IWM hasn't even been that volatile recently. It's sort of been hovering around this 200 line. But in this case, you're getting all the way out to the end of the summer and a break even just above 200. And you can even go into the 200, make this a 200, 215. You can see where that is. That's a break even about 204.80, just under 205. Coming back to at the money, taking this up 20 points wide. You can see where that puts the break even 204.29. Again, IWM was there a couple of days ago. So just a way to look at some of those further out trades and see where the setup is if you are going to position bullish for the rest of the year. And of course, bearish is the same way. Any of these indices, any of these ETFs, the same story applies to the downside.